This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are, late February, and it's really hard to find anything wrong with the equity markets. Basically, they're firing on all cylinders. Over the last 2 weeks, we saw the NASDAQ break out of a trading range. Similarly, last week we saw that on the S&P 500. Basically, over the last 2 weeks, we haven't had any distribution days. Beating all we've seen every day is days of heavy accumulation. And basically, towards the end of the day, the market's always rallied up into the close, which points a very bullish picture. And we see participation in the small cap, the Russell 2000, which was lagging, basically consolidating for a whole year. Finally, that broke into a new high last week. We saw mid-cap leadership. So if you look at the S&P 400 mid-cap, that's leading the market. That's been making higher highs consistently going forward. So you have pretty much a broad-based rally. The advanced decline lines making new highs in the NYSE. We have the Dow Jones also hitting a new high last week. Now the one maybe sector that isn't participating, the Dow Transports, still didn't make that new high. So we'll be looking for that. But basically across the board, broad-based rally continuing. And we see this across the strongest sectors. The biotech sector continues to be very strong. There's probably over 300 stocks in that sector alone, and it'd be really tough to sort the greater ones from the not so greater ones, because a lot of them are getting bid up pretty well. And of course, you have the big cap steady eddies like Celgene, Biogen, Regeneron, Gilead, Medivation. Some of those stocks, always worth a look. And of course, there's a lot of smaller ones, but we won't go into that. So if you want to participate in that space, you can look at the IBB, which is the NASDAQ Biotech Index, or an FBT, which is the First Trust Biotech ETF. So either of those are in play as well. Semiconductors also continue to do well. We see stocks like Skyworks, Avago, NXPI, Monolithic Power is trying to break out, Silicon Motion, ARM Holdings is at a pivot point. So you see all these stocks just setting up and breaking out, again pointing a very bullish picture. And of course you have the retail restaurant sector continuing to do very well. Apparel sector, building sector starting to do very well. The home building index at a new high. So again, a broad-based rally. Now, if we look at the sectors of the S&P 500, the ETFs, all of them are firing all cylinders except the energy still lagging, financials are lagging somewhat, and utilities aren't doing very well at all. So just keep that in mind. If you stay with consumer discretionary, technology, or healthcare, you'll probably be in pretty good shape. Now, moving forward, so we're looking for a lot of stocks that are setting up. So one of the stocks that's coming across our radar is Grubhub. It's in the internet content space. Now that particular group isn't doing really great in itself, although the technology sector is doing well. But anyways, Grubhub basically came in some really strong earnings over the last few quarters. Increased from 50% to 167% to 550%. Revenues were up 50% last quarter. Now Grubhub is also growing through acquisitions. It's an online platform for food delivery service. And it said that last quarter, the active diners increased 47%, bringing it a little over 5 million. And it thinks it's only penetrated about 3% of the market, and it thinks there's room to grow. Estimates for 2015 are at about 103% increase, and for 2016 at about 79 cents at about 34% increase. And here's why we like it. Grubhub went public about a year ago, made a short consolidation, then last August hit 45.80, somewhere right around there. And it's been consolidating all that time until this last earnings, where it had a pretty nice pop, strong volume. It formed a nice cup-shaped base, moved up to about 41.75, backed off a little bit over the last week. So what we're looking to see if it can take out that 41.75 on big volume. That'd be our pivot point, and that'd be something you want to try. Of course, you want to see if consult with your financial advisor if this trade is for you. So anyways, if it can take it out in volume, that could be a play. Of course, use a customary stop anywhere between 5 and 10%. But as always, let price and volume be your guide. So again, just to reiterate, the market's firing on all cylinders. Looks like a pretty good time to be in the market right now. Continue to look for stocks that are setting up in bases and breaking out of all the sectors I mentioned. And then if the risk tolerance suits you, be aware IPOs have not done that great when they're coming out of these bases this year, but this is just something to keep an eye on. So as always, price and volume be your guide. This is George Tkaczuk for RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading day.